why would someone consider investing in a venture studio?
Well, let's start by asking a more fundamental question first. Are you investing in venture capital? If you're investing in venture capital, you're investing in the creation of new companies, but you're coming in at a little bit of a later stage in the life of that company. So the question you really should ask yourself, because the economics at the earliest stage, at day zero, are the best.
Right.
Why are you not putting any capital to work at that stage? Well, there's not a lot of many investment vehicles that give you that access. Studios do. So if you're interested in this space at all, you should be looking at how you're allocating across it. And if the allocation at day zero is $0, that's a gap you might want to look at. But looking at the studio itself, the studio is really designed to de-risk entrepreneurship, to make companies better, faster, and more successful. That sounds like a great place to put some capital. Now, there's some challenges here because a venture studio is really playing three core roles, right? In every company that builds. If you look at a venture fund, they're playing an investor role. That's it. They might be advising a little bit, but they're playing just an investor role. And all of the overhead costs are for that investor role. A studio is playing two additional roles. You're going to play an entrepreneurial role. You're going to have to figure out what to build, how to maneuver this company into something that goes from an idea to something that is successful. And you've got to build it. So that's the operator role, right? I'm building the code. I'm building the infrastructure of the business. I'm helping scale this thing. That's a lot of additional work, and that work costs money, right? You have to have a team to do it. So one of the challenges of the venture studio model overall is that it looks a lot different when you look at the
Right.
finances of a studio and how a studio has to operate to be successful than a venture fund. And that's one of those things that investors, when they first come to this model, they see that and like, what's
That's a
going
lot of
on?
management fee.
Yeah, I'm used to paying a 2% management fee. Like,
Right.
what's going on? Well, yeah, you pay 2% a year for any fund vehicle to play one role, investor role. Okay, well, studios doing that, and they're playing an operator role and an entrepreneur role.
Yeah.
Okay, so what's the right, fee structure? Well, I don't think we need to go into the deep, nuanced discussion of all the legal structures and everything, but just be aware if you're an investor looking at these opportunities that the cost structure is different. It is a very, very different investment vehicle than a typical 2 and 20 fund structure. But look at what it is providing and how well it is working.